Okay, let's take a look at the entry and exit script that we have. This is a special indicator that basically shows us on a chart some oversold or overbought indications on the chart, and we generally use a generic gray bar for our bars. We don't use red and green. We just showed price action on either a filled in gray bar or a hollow bar like this. So that's our general indication of bars, and we color bars based on oversold or overbought indications. And so you can see that here where the candles turn pink or yellow in these examples, or they turn blue or purple in these examples down here and down here. Those are overbought, the yellow and pink, and then the blue and purple are oversold indications. And so the original version of this would actually, give you an alert, could even send you a text message if you had that configured to do that from your alerts, and it'll show a bar appear, a label at the top for buy the dip signal or get out signal. And so this version is a more advanced version of the script, and it can actually show you multiple indications of how many times that particular script and indication signal actually fires. So for this particular day, we're looking at the S&P 500 on January 24th or 25th, 22. And so as this particular price rose, it got to an overbought indication. This pink and yellow are showing you overbought conditions. The yellow is single level overbought, and pink is actually a double overbought indication. So it was kind of flashing both, and then each time of these down chevrons underneath price action are the times when this signal is actually fired. So 4 different times it fired before price action did get to an overbought indication and then finally sold off. So this is a little more advanced indication and allows us to not react just to a single indication. Sometimes that's all it takes. Like, let's go to the next day. Here we had a single overbought indication sitting at a high of a day, and then it pulled back. Here we had one, but price action didn't really react after this indication. It continued to grind higher, but eventually, I don't know what the news was, what it was this day, it ended up coming all the way back. And then you get down here, you got some blue indicators, but here the blue indication can show that it's oversold, just like here the purple. Those are all oversold. This is single level, and this is purple is a double oversold indication. But in this particular instance, we never saw any up chevrons, these blue up chevrons, which shows the actual firing of buy the dip. These had GTFOs, get the funds out, right? And then these had GTFOs, 1, 2, 3, 4, 5 different times it fired on this particular indication. And then down here, it had a buy the dip, had a buy the dip, had 1, 2, 3 more. So 5 different times we had buy the dip here, 5 different times we had GTFO, get the funds out, up here. So that's the advanced version of this indication. In addition, if you want to see and configure these, to edit these studies and show some more advanced features, you can go to Edit Studies, go down to your entry and exit signals, double click on it, and you'll have a whole bunch of different options here. Most of this stuff you're not going to want to necessarily change. We leave the length of the indication at 4 and 1. You can change this average type to a whole indicator instead of Wilders, and it'll be a little more aggressive. You can see how many more colors it has, but this ends up really being a lot more noise than we really want. So generally speaking, we just use a Wilder EMA, and then you can actually change the thresholds of this. If you want it to be a little more sensitive to things, then you can bring this to a higher range, like to 30, or if you want to be less sensitive, you can bring this down to 20. So by default, the oversold indication of level 1 is 25 and 75, and the secondary is 30 and 70. Okay, so you can mess with these and see if there's a particular, we use both of these thresholds for the two different sides of the oversold, overbought indication. We also have a deal that says show arrow for entry and exit. So do I want that? Say yes. And so that's what the chevron is. So if I turn that off, I say no, I don't want to show that. Hit OK, hit apply. All those chevrons that were up here showing downwards and upwards right here are gone. Okay, you see how that works? So under that configuration, show arrow for entry. Say yes. Okay, boom, it's back on. Okay. Next, we're going to look at show bubble entry exits. No. By default, we say no. And the reason why is because it ends up adding a lot of clutter to the grid. And so if you say yes, there is an option to offset that by a certain number of points if you want it. If not, it kind of configures itself to be above price action so it doesn't show. But if you want that, say I want a bubble to show up, $2 above whatever this price is. You can configure that to just put 2 here instead of the bubble showing up at 441, it'd show up at 443. Okay, so that's how that would work. And then you can have text you could put on the bubble. You can say B or buy, or you can say S or sell, and that text will actually show up in the bubble. Now that we have bubbles turned on, I hit apply. Now you see it says sell at whatever price it was, and then the stop for that sell signal. Same thing for the buy. Buy when that triggered, and then the stop that was generated based on that signals. But you can see how these overlap. They're hard to read. That's why by default it's turned off. But if you wanted to see that information, it is available to you by configuring that particular deal. We like to have just B for buy, S for sell, and we generally, if we're going to show it, we don't necessarily show the stop price because we know generally when these happen, we're using that low part of that price action as a pivot to use as our stop for general purposes. So if I do that, I hit apply. So now I just have B for buy down here. Here's what the price action for when that buy occurred. So if these occurred and we had a buy at 433.74, well, your stop is into this particular last 2 or 3 bars of where that signal occurred. So you have a very tight risk reward. You're trying to catch the bottom of price action and for a price action to change. This particular indication came down near the previous day close, and generally price sometimes will bounce there, and it did bounce there, but this day was a lot more bearish, and price action continued back through that, and kind of you have this bear flag, and then it happens again. Another multiple by the dips occur, and then so that a lot of times what we do is we look for these indications of buy the dip followed by gray bars. Okay, and the same thing with the oversold or overbought conditions up here. When you have multiples firing and then until you get that gray bar, the gray bar is a confirmation within our signal parameters now that actually gives you a stronger signal that this particular indication is going to work a lot more favorably for you. Down below, you can actually show price, and so the alert text, this particular type of text is when what you want to see in the message box. So when you go to your messages, if you want these alerts on, you say alerts say to true, then it will alert, ding you, and it'll show up in that message box. And this is what you can say. If you want, you can say entry and exit. So this is from the entry and exit indicator. You just change whatever text you want in that alert. You can say, you generally just leave this type to bar and then whatever type of sound you want it to make when you want the alert. But if you want the alerts off every time this fires, so this would ding at you 1, 2, 3, 4, 5 times that morning. 1, 2, 3, 4, 5, 6 times, around noon. So you may not want all that noise. If you don't, just set this to false, and it turns all that noise off on this entry and exit signal. So that's a kind of a long summary of this this indicator. It has a lot behind this, and This is really good to use for intraday trading when you're finding price action. If price action is moving towards a particular area of resistance, a previous day close, a previous day high, an ATR level, and you start seeing these signals, it's a good indication that price may be finding some resistance, both from a expansion in price levels or either high or low, and price action may be pivoting. It's not a panacea for you for price action. It's not. It doesn't always work. There are times when signals occur, like in this example, and price action continues higher through that. These signals occurred here on the downside, and price action continued lower through that. So these are not absolutes, and they should not be used as an absolute or guarantee of any sort of price action. They're simply signals that say these things are oversold and price action may be pivoting. So that's what the indicator is telling you, is that, hey, now we're seeing a possible pivot in this, and the oversold indications might be turning. Overbought can get more overbought. Oversold can get more oversold. So just know that and trade accordingly. So with the fast moves in the market up and down, these signals are not absolute. You can receive multiple signals on a 5-minute chart. So we recommend to use this as for an opportunity alert as opposed to the definitive signal to enter or to exit. You need to understand price action and take your limited risk on these signals.